This strategy will make me a consistent six figures a year for the rest of my life in under 30 minutes a day. And the strategy I'm referring to is the 15-minute opening range breakout. And it's really, really simple, guys. So let's break it down right now. All right, step number one, the first 15-minute candle that forms at market open from 9:30 a.m. New York time to 9:45 a.m. New York time, we are going to chart out the low and call that the 15-minute opening range low. And then we're going to chart out the high, calling that the 15-minute opening range high. And now we have our parameters for our trade. The reason that so many people fail using the 15-minute opening range breakout strategy is that they do not have a daily bias and they really don't have a draw on liquidity. As a trader, you can't just jump into a trade once we break out of the opening range with no reason to actually be in that trade. You have to look at the bigger picture so that you know where this trade is actually running to. So all I'm going to do is look for my London and Asia session highs and lows. Over here on the left side of my charts, I noticed that we have Asia low resting below, which is going to give me my first TP target. I also noticed that we have our new day opening gap, so a huge gap in price action that we need to see price come back and fill. So now I'm looking for price to fill that entire new day opening gap and come down and take out our sell side liquidity. So now that we have our bias on the day, all we need to do is use our Fibonacci retracement tool from the opening range low to the opening range high. This is when we're just going to be looking for a retracement back into the 50%, just like this, and then we're going to be looking for a continuation move back down to take our sell side liquidity and take TP. The awesome thing about this setup is we do not have to wait for an opening range breakout to catch this short position, because now we've retraced back into the premium of this range, we've swept internal liquidity, and we've traded into a 15-minute bearish fair value gap. So now we're looking for our bearish entry, and we form a bearish breaker unicorn model right here once we break through these lows. High, low, higher, high, displacement of the lows. And then we form this 1 minute bearish fair value gap, and that's where I would target my entry in the shorts off of right here. All right, so I'd be targeting my entry right here at that 1 minute fair value gap, keeping my stop above the breaker block, and then I'm targeting that Asia low for my full TP on this trade. So let's see how this one would play out. We have our entry off the 1 minute unicorn. It's already coming down. This is a good level to snag a first TP right here at these relatively equal lows. And boom, just like that, we go down and hit full TP at Asia low. Now you could even hold this one to fill the entire new week opening gap like I talked about earlier. And look at that trade right there. You could have taken full TP at 730 ticks or taken full TP at around 1400 ticks in profit.